It's about that time of day again. My name is Joseph. Tuesday evening, August 28th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is range-bound this evening, so my plan is to fade the breakouts using failure patterns tomorrow morning. The S&P is bearish with a triangle here tonight, and that tells me to look for selling opportunities using the 2-try rule around the edges of the range tomorrow. Nasdaq is bullish with a range as well, and that tells me to look for buying opportunities using seller failures in the 2-try rule below those lows tomorrow. Gold is bearish with a strong spike lower, and that tells me to look for selling opportunities using a buyer failure pattern just above the moving average tomorrow morning. And of course, we can't forget about the euro. The euro's bullish with a spike in channel pattern tonight, and that tells me to look for buying opportunities at key support trend lines for a target going back to retest the high tomorrow morning. Now, as always, I got a great newsletter in store for you guys and gals tonight. We got plenty of reliable opportunities setting up for tomorrow. We got some big news. We got some big opportunities. Before we jump in, though, and plan tomorrow's trading strategy, I need to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of this YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. That's right, give me your name and your email address in the upper left-hand corner, and I'll shoot you an email every time I publish something new. If you're hanging out on social media, Stock Twitch, Twitter, Facebook, LinkedIn, whatever your favorite flavor of social media, right? Follow me in lower left-hand corner. I'm always posting exclusive content on my social media channels. And then don't forget, if you want the charts from tonight's video, you can download all the charts from tonight's video, have them ready on your computer for tomorrow, right where it says click here to download today's charts. Grab those charts and be ready for tomorrow's trading session. And then don't forget, if you wanted to come join me as a guest in the trade room, I got a free pass in the upper right-hand corner. Grab that free pass. Come join me as a guest in our trade room, right? See what we're all about. Learn more about the strategy, right? And see what it feels like to be a client here at School of Trade. Don't forget, if you have any questions, you can always hit me up on live support. We got live support on the right-hand side of the website. Right? Any questions, you can always post those questions on live support, call me in the office, right? Or drop me a comment below the video. All right, let's jump right in here. We got a big newsletter video for you guys and gals tonight. Get ready for another big day tomorrow. It's been a great week here so far. As we talked about in last night's newsletter, we are starting to see the signs of the end of the month. As we get closer to the end of the month, we expect to see volatility start to kick up. And as I mentioned in last night's newsletter, Wednesday and Thursday this week are where all the big news is going to pile on. So as we go into tomorrow and Thursday's session, we got a lot of news on the schedule, and of course we're expecting to see an increase in volatility. So I am very excited about the next 2 trading sessions on Wednesday and Thursday this week. It's also important to remind you as well that next Monday, September 3rd, is the Labor Day holiday. Markets are closed, which means this Friday, the 31st, the last day of the month, is probably going to be a bit of a half day. So we really want to try to make our money this week, right, in the next 2 trading days, because in my opinion, Friday morning is really a big question mark at this point. We really don't know how much we're going to get on Friday morning, so we're trying to make our money on Wednesday and Thursday for the rest of this week. Speaking of Wednesday's trading session, though, we get the big news report coming out tomorrow morning, that GDP number at 8:30, that's on our radar. We have the petroleum status report. That is on our radar tomorrow as well. We got some home sales numbers at 10 o'clock Eastern tomorrow morning, but that shouldn't be that big of a market moving event. Our big news tomorrow, though, is going to be that GDP number at 8:30, so be ready for that early in the session. And then don't forget, you got the petroleum status report tomorrow morning at 10:30. If you're like me and you like trading crude oil, remember that cutoff tomorrow around 10 o'clock Eastern time. The news isn't until 10:30. 10:30, but usually what happens is markets really slow down dramatically. The oil market, that is. This only apply to oil, right? We'll typically slow down pretty considerably into that news. So watch the time tomorrow morning if you're trading oil, and don't forget, we'll be in our trade room at 8 o'clock Eastern time, and I'll make sure you're aware of all this tomorrow morning. But be aware of that, right? Tomorrow morning, petroleum status, the weekly inventory report at 10:30. 10 o'clock, right? 10 o'clock is that big round number. We want to get those trades on oil before 10 o'clock, or we have to wait until after that news comes out, let the market settle down, and then go from there. So two big news reports tomorrow, GDP and the weekly inventory report. Be aware. Again, we'll be in our trade room tomorrow, 8 o'clock Eastern time. I look forward to seeing you right there with me. Let's jump into our charts here tonight. We got crude oil, S&P, Nasdaq, gold, and euro. Starting off tonight on oil, crude is trading sideways inside of range this evening. The overall trend is bullish, and that tells me to look for buying opportunities using seller failures and the 2-try rule. And my focus is to fade the edges of the range, avoiding the middle while using the swings above the highs and below the lows for the most reliable trading opportunities tomorrow morning. And again, as I go over this plan tonight, it is important to remember, again, that time is critical tomorrow for all you oil traders. Now, as we look at the chart here tonight, we can see we have a strong move higher into this trading range, right? This definitely gives the range a bull bias. Whenever I have a bull bias on a trading range, ultimately I'm looking for two main types of trades. If I have a trading range with a bull move going into it, I'm now looking for basically one of two patterns. The first one, and the more reliable pattern, will be what I call a 2-try failure. That is a 1-try to break out, a 2-try to break out, and a failure back in. Once I see those sellers, 1-try, 2-try, I'm now looking for that buying opportunity now going back up into that range. That brings me now to the second opportunity, which of course is a breakout pullback. Now, this particular type of breakout pullback, I don't just try to take a breakout pullback. What I want to do is I want to get that moving average up above the top of that range, and then very important is a 2-legged pullback, so I can use what was resistance here, I can use it now as a level of support. So once again, it's the 2-try failure, that 2-try failure below the low of that range, or a strong enough breakout, strong enough to get that moving average to clear above that high, so we can take it as a breakout pullback pattern. So as I look at this range here right now, right, there's that big range. I'm going to zoom in a little bit closer on this at this point now, and you can see here, we're right down around the lows of that trading range. So ultimately, we have the 1-try, we have the 2-try, and I'm looking now for a failure pattern. That failure will almost always lead to strength. That strength, I don't want to chase after. I'll look for a pullback, and then we're looking to buy that pullback going back up into that range. So again, looking for that 2-try failure at the lows, 1-try, 2-try, failure back up in. This is a 1-try, 2-try, and then I'm watching how those bears, now try to sell the pullback. I'm looking to buy into their failure. Don't chase after it. Find that new channel, right? Find that pullback, and we'll go from there. I call this the 2-try failure. Failure leads to strength. Strength leads to pullbacks, and pullbacks will retest the high. 1, 2-try failure. Failure leads to strength. Strength leads to pullbacks. Buy off that low, right? Failure into pullback, and then back up, right, to retest the high of that range. Now remember though, right, if we run higher here, we really got to see a strong move, right? In fact, in my opinion, you really got to get that moving average up above this 69 and change up here, right? So if we do see a strong enough move higher, and again, it will have to be quite strong, then we can look for that two-legged pullback and we can buy from there. Again, got to be above, right, the top of that range. Really going to take a strong push above that range high. Now, what if we can't get that strong of a push going higher here? Then what do we look for? Well, then we can look for that one try, two try, but instead of a failure pattern, just selling a failure back in, you've got to remember the market's bullish overall right now. So taking a buyer failure for a sell isn't going to be the most reliable pattern in the world. Be better off to draw that channel down, bring it back up, right? And then we can sell off that high, right? That'll be a much easier sell instead of trying to sell the failure. So for example, on crude, right? It's a bull market, so I can take that failure, I can take the failure, I can wait, and I can buy the pullback, buying off of those lows. But at the highs though, it's one try, two try, failure. Again, I'm not going to jump into the failure. I'll look for that pullback, right, and sell that pullback going back down, right, to retest that low. Stay away from the middle, stay away from that middle, right, buy those lows, sell those highs, keep an eye out for a breakout. Now, what would a breakout look like? I have a term that I use, right, called the 1, 2, 3 breakout, right? 1, 2, 3 breakout. And I always kind of joke around with you guys by saying there's an exclamation point at the end of that. 1, 2, 3 breakout, right? It's got to be strong. So for example, if we're trading inside the range here, 1, 2, 3 breakout, big strong break higher, or we go lower, 1, 2, 3 breakout, right? The key is we've got to see getting outside this range now. We have to see it 1, 2, 3 really run. Once we see the market really run, then we know we get a breakout. We'll find that new channel. Don't chase after it, right? And look to sell off the high of that hidden channel. So just a recap here real quick. We're buying low with the 2 try rule, right? Failure into strength, strength into pullback off the low. We're selling the high here, not on a failure, but on a pullback, right, off those highs. We're watching for that successful breakout pullback pattern if we can get the moving average up above those highs, and we're keeping an eye for those breakouts, right, with strength 1, 2, 3 breakout. Now, if you're here for the first time today, real quickly here, if you're here for the first time right now, I want to give you a much deeper dive into this entire trading strategy. I got a lot of videos on my YouTube channel, and I know it's tempting to go back and watch all of them to pick it all apart, but I'm going to give you a shortcut right now. In the upper right-hand corner, I want to give you a free trading course. That way you can make the most of our time together every evening on this nightly newsletter. So grab that free course. It's right in the upper right-hand corner. I'll also link it up in the description of the video as well. Grab the free course, learn all the patterns, learn how to find ranges and channels, learn how to use the moving average, right? It's a great deep dive into the same strategy we use every day in our trade room. And don't forget, we're in our trade room every morning at 8 o'clock Eastern time, and you can come trade the strategy with me. One last thing, don't forget, time is of the essence tomorrow. Keep your eyes on the clock tomorrow if you're trading crude with me, because we got to make sure we trade around that news report at 10:30 Eastern time. How about some S&P now? S&P is bearish with a trading range, a triangle, and a measured move on the chart this evening. The trading range is a bear bias to it, and that tells me to look for selling opportunities using buyer failures and the 2 try rule. While that triangle pattern reminds me to focus on the swings above and below the range for the most useful levels of support and resistance. And if I can get into the market above the highs of the range, the targets are waiting at that measured move down around 28.89, 28.89, 28.90 here tomorrow morning. So as you can see in the chart tonight, we get a strong bear move lower, right? That strong bear move lower ends up going sideways. Lower highs, higher lows. That ultimately now creates a triangle. What you want to understand about triangle is to focus on the edges. Focus on the edges, right? So here's my triangle. It's a bear bias with that triangle, but focus now on those edges. Really focus on those edges because those are going to be the most actionable areas on that chart. So when I see a triangle, right, pretty much a trading range tells me follow the directional bias, right? It's a bear bias. I want to sell. It tells me to focus on failures using that two-try failure, right? That two-try failure. 1 and 2, right? 1, 2. And then as for a target, targets are easy. Targets are the opposite side of that range. And then don't forget the measured move, right? So we got the A, B, C, and then D, right? That'll be your easy symmetry target as we go lower, right? So targets back at the lows and targets using that measured move as well. So as you can see, when I go back to the chart now, strong move down, there's my triangle. Really tune in to those edges, right? Because those edges are going to be really valuable, actionable levels of support and resistance tomorrow. I already know the market's bearish, so I want to be a seller and I want to sell above the high of that range. How do we do that? We wait for the price to try to go higher. Make a different color here. Wait for price, try to go higher. Get that moving average coming over. Let those buyers try to buy the pullback. Right? Let those buyers sort of buy the pullback. It's bearish, so the odds are not in their favor. We're going to look for that sell, right, as those buyers get forced, right, to liquidate their longs, right? What happens when buyers get stopped out? They become sellers, right? They become sellers and the market will tumble back down again. Now, as we go lower here, right? So 1 try, 2 try, targets back to the opposite side, targets right down at that measured move for tomorrow. What's another option here for us? What if the market goes lower right now? What if it goes lower? If it goes lower, remember, we've got that triangle now. It's going to try to bring this thing back up into that trading range. So with that trading range, trying to drag that price back in, at this point, we have to use that same playbook that we used from crude oil. In other words, we have to see a strong enough breakdown in order to give me the confidence now to sell this break lower. So what would that look like here? Well, it's always tempting to want to use the underbelly, right, of this triangle. But usually, though, that's a really aggressive trade because it's setting you up, right, for a failure going back up into that range. Again, focus on those edges. If I can get that strong move down, I can get that moving average over, now I can use that edge not as support, right, but as resistance to finish off that measured move. So a recap here again, we're looking for the 1 try, 2 try, failure back down, 1 try, 2 try, failure back down. And then again, if we're trying to go long here, right, it's the 1 try, 2 try, failure, not so fast. Find that new channel and buy the pullback if you want to buy it off of that low, right? Because again, it's an overall, right, bear bias at this time. And then, as I said earlier, grab that low. If we can get below that low now I can use that low, make sure the moving average is there, right? Make sure that moving average confirms. That's always the trick. Get that moving average to confirm, then you know you have a strong enough or a big enough breakout, right, to that downside. Hardest part tomorrow, we got some news headlines coming out tomorrow. We got some closed door testimonies tomorrow at the White House or Capitol Hill. So we may be a little bit sluggish in the middle. If we stick going sideways, keep focused on failures. 1 try, 2 try, keep buying low, keep selling high, right? And again, watch out for those breakouts, right, with that 1, 2, 3 breakout, right? So 1, 2, 3, big, strong break higher, big, strong break higher, right? Breaking out higher, nice and easy there. Buying that pullback off the new channel. If we get that 1, 2, 3 breakout, don't be afraid, right, to use that new channel, combine it with that low, right, and look for that sell off of resistance. I want to sell at resistance. I don't want to sell as the market goes lower. So just be aware of your surroundings, right, if we do get that breakout or attempted breakout tomorrow morning. Let's keep going. How about some Nasdaq right now? Nasdaq is bullish with a trading range, reversal line, and gap on the chart this this evening. The trading range is bullish, and that tells me to look for buying opportunities using seller failures with the 2-try rule, while the reversal line down at 75.40 half makes for an excellent support area to look for those buying opportunities tomorrow morning. So this on the Nasdaq is basically a spike and range pattern. It's almost identical to what we saw on crude oil. It's just a much smaller version of it, right? So here once again, we have that strong move up, we pull back, we double top. This becomes a trading range, and we're ultimately looking for the same strategy here. 1 try, 2 try, failure, back up, or that breakout pullback right above those highs. These are the two that we're looking for here. So we got that strong move up. You'll notice I'm being a little bit loose on this trading range. It's not a very active market the end of the day, yesterday and today. So I'm going to combine this and say this is just one big trading range. You can see the middle of that range, the midline acting as support. So it's very, very simple there. What I'm really looking for though is I want to see a pullback. We haven't seen any real pullback since Friday morning, last Friday. So I would imagine a lot of these buyers are waiting for a chance to get long, and I've got my eyes on those swings, right? That 50 half area, but most importantly though, get this out of the way here, right? That reversal line. This is the same reversal line we found from last night's newsletter, then at 75.40 half. That really would be a perfect area here for the buyers tomorrow. So again, we'd like to go down to the low of this range. That would be a 1 try, 2 try, failure back up. And again, it's a 1 try, 2 try, failure into strength, strength into pullback, and then pull back up, right, to retest the high. And again, if you want to see, literally, I have hundreds of examples, real examples from these patterns, right, from real charts. I'll link it up in the description of the video here tonight. Grab that free course in the upper right-hand corner. Learn the patterns. You'll love the patterns. They're very, very easy to learn. And when you use them in the right way, in the right locations, they really can't be beat. So strong move up into a bull range. 1 try, 2 try, failure into strength, strength into pullback, pullbacks go back, right, to retest the high. Now, what about going higher here, right? What do we do if this thing wants to go higher? Well, this is where we got to be careful. We got that big round number, and at all-time highs, big round numbers are pretty much the only psychological levels that we have to work with. We're already there at all-time highs, right? So we're trying to make sure that we don't buy high right now. So what I need to do is I got to get that strength, right? I want, in these environments at all-time highs, I really want to see this strength, pullback, strength, really show me that they want to take this higher here, find that new channel, and I'm looking for that hidden channel now, that spike in channel as we break higher, right? That's very different than trying to predict that this pullback will go, right? In my younger years, I would have tried to take that trade. The problem, though, is a lot of times those trades, what happens is they go a little bit up and they collapse back down again, right? Like we saw back here, right? That break higher, it barely breaks higher and it collapses back down. I don't want to take that trade tomorrow. I want to see 1, 2, 3, nice strong push higher, really get that punch going higher, show me the bulls mean business, right? And then we'll look for much more reliable buys as we go higher from there. So basically, it's the 2 try into strength, right? Failure into pullback, pullback back to retest the high, or that strength, pullback, strength, that 1, 2, 3 breakout, right? And buy the low of that channel. Last but not least, how do we turn bearish? Is it possible tomorrow? Oh, absolutely it is. We still have that gap hanging out here from last weekend, a weekend gap too. In my experience, most gaps that are left between Friday and Sunday night get filled before the end of the day on Wednesday. So of course, with that gap hanging out there at 74.96 half, obviously it's way too early to guarantee or predict any reversals, but how would the market reverse? What would it look like? Well, here's a good way to look at it. Look at how strong the market was to the upside. You're going to need to see something strong like that to the downside, right? You're going to have to see a real strong move down, right? Strong move down, pull back to the moving average, strong move through. I call this the 1, 2, 3 reversal, That's right. I swiped that one from the 1, 2, 3 breakout. Right? Absolutely. Same basic principle though, right? 1, 2, 3 breakout, 1, 2, 3 reversal. It's the same basic principle. I want to see that 1 leg down. I want to see that 2, the pull back to the moving average, and I want to see that 3, right? Running away from that moving average. That run away from the moving average is exactly what we're looking for to give me the confidence now. Don't chase after it. Don't sell low, wait to sell high, find that new channel, and usually you can find, right, some great trades off of the underbelly of that level around the top of that channel. That's going to be what I'm looking for tomorrow to be a seller. And with that gap at 74.96.5, that makes for an easy target for those bears. So relatively easy plan here on the Nasdaq. It's very similar, right, we have on crude oil. Buying low, being hesitant to buy high, waiting for proof to buy high, right? And again, potentially a reversal, but only if we see the 1, 2, 3 reversal. Let's keep going. About some gold here tonight. Gold is bearish with a strong spike lower, a bear channel, a hidden channel, and a reversal line on the chart this evening. The strong spike lower tells me to wait for a two-legged pullback and sell back down to retest the low, while the two channels give me a resistance levels that are great for these types of moves, so I can sell down to that measured move. There's a couple components on the chart. The most important thing right now on this chart, though, is this strong move down. Anytime we see a strong move in one direction, we typically see a two-legged pullback and a retest of that low. Repeat that again for me. Anytime we see a strong move in one direction, I call it a spike, right? You can call it whatever you want, right? Call it a spike by most traders. Anytime we see a spike or a strong move in one direction, we expect to see that deep pullback. Usually it's two legs and a retest of that low. So we know there are going to be lots of sellers waiting up at resistance levels to get short this market. Not a good idea to sell it now. It's too low to sell here. I want to sell up at levels of resistance. So let's find some levels of resistance. Here's one. Draw a trend line off those lows up to those highs. That's a level of resistance. Here's another one. Sneaky one here, right? A hidden channel off those lows, off that high. That's a level of resistance, right? So those are both kind of hidden levels of resistance. And on top of that, I've got swings here at 11.5. I got the reversal line there at 13.2. Those are levels of resistance. So really, guys, in all reality, you could look at this and say this whole area here could be seen, right, as a key, right, as a key resistance area. That whole area up there, right, is going to be prime for selling. Now, where's the big target on this? I'm glad you asked. We start off with this first leg down. That first leg down, you'll notice, is not symmetrical to that second leg down. So typically when this happens, it's kind of like the old Elliott wave, the 5-wave sequence, right? 1, 2, 3, 4, 5, right? The first leg down is usually symmetrical to that final leg down, right? So wave 1, right, is equal to wave 5, right, if you're an Elliott practitioner. I wouldn't get too wrapped up in Elliott wave, although we do see some fantastic Elliott wave sequences in the early hours of the day. The problem, though, is as the day gets older, it tends to get very subjective, and I'm not a big fan of subjectivity. The bottom line, though, is we have that first leg down, second leg down. I'm going to take this leg, right, this leg down, that first leg down, and depending on how far it pulls back, let's just say, for example, we pull back to that battle zone, that becomes my final target down around that 1203.8. So no matter where we pull back, right, it all depends on where we pull back. If we pull back all the way up to the battle zone, which I have drawn in right now, then take that, right, measured move and calculate from there. But again, it's calculated from that 20.7, right, to that 13.2. That leg, we pull back, that's the leg you use, right, to calculate it. Now, if we keep going, there's that big round number. Remember, 1200 is seen as that warm, cuddly little area here for gold traders, right? We're probably going to end up back around that 1200 eventually here, right, if the bears can keep control. So again, I'm looking for selling opportunities up at resistance. I'd like to see us go up and back down. So a couple different options here right now. One would be a simple pullback pattern, probably not going to be that easy, right? A simple pullback to the moving average. What I'd really like to see is, I'd like to see us get a little more altitude on this thing. I'd like to see us go up into that battle zone. Let these buyers try to buy that pullback. Let them try to run this market higher here. Well, let them try to buy the pullback. The market's momentum is bearish, which gives me the green light now to sell into their failure. Don't chase after it though. Once it drops, find that new channel. Sell off, right? Sell off the high of that channel, right? Sell off the high of that channel. Okay, pretty easy, but again, because the momentum is bearish right now, I can sell a buyer. Failure into strength, strength into pullback, and pullback back down to retest that low. And again, I'm going to use that measured move, which I can't confirm yet, but we'll know where that measured move is once we get into that sell, right up into that battle zone. Also, don't forget, there's that larger channel here. So don't be surprised if we see this thing really jump higher here. Failure, strength, pull back, right, and back down from there. So don't be surprised. You know, big drops do equal big pops. We got plenty of space to pull back right now. Typically, the bigger the leg down, the smaller the pullback's going to be. So we're looking for, ultimately, I just want to get above the moving average, right? Get me above that moving average. Let me chance to sell into those buyer failures, right? Get that new channel and sell off of that channel. And again, I know I'm talking a lot about these failure patterns into strength into pullback patterns. I'm drawing them for you here tonight. But if you want to see hundreds of examples of those real patterns on real charts, grab that link in the description. It's in the upper right-hand corner as well, right? And grab that free trading course. As part of that free course, I'll send you hundreds of different examples, right, of these patterns, and that way you can see what they really look like with real candlesticks. All right, let's keep going. Oh, last but not least, you're on the gold. How do we reverse? Can we reverse tomorrow? Reversal possible? Oh, absolutely it is, right? Especially with a market like gold. What would a reversal look like tomorrow? 1, 2, 3, reversal, right? So 1, 2, 3. Now this is not going to scale, but your first thing though is a strong move higher. It's got to be strong, right? The only way to get buyers interested in buying that pullback is if we get a strong move higher. So strong move higher, pullback holds the moving average, then strong move off the moving average. Remember though, a strong move higher does not guarantee a reversal, right? It could easily now pull back, fail, and collapse back down. That's why I always wait for that explosion higher. Once we see the explosive move higher, we know the buyers are in control, and then we can buy that pullback for a retest of that high at 20.7. Does that make sense? Pretty simple, right? Pretty easy strategy. Sell high. I'd love to get back above the moving average, just barely to get those buyers confused, and then sell right into their stops. Let's keep going here. Last but not least, over to the euro. Euro's bullish with a spike in channel, a trading range, support trend line, and resistance trend line on the chart this evening. The spike in channel tells me to look for buying opportunities after a deep pullback off the high. The short-term trading range tells me to look for buying opportunities below the lows using the 2-try rule. And really, the resistance trend line is the only thing standing in our way right now from getting long. That resistance trend line coming down overhead tells me to wait for buying opportunities once we get back above that trend line, right, to use it as support instead of resistance tomorrow. Here's something we haven't seen yet tonight. We actually have a strong trend here right now. Got a spike in channel. Spike in channel patterns are notorious for deep pullbacks. We talked about this last night in the newsletter. Spike in channels are notorious for really deep pullbacks because eventually the market will become overbought. Nobody wants to buy as high anymore. So again, spike in channels notorious for deep pullbacks into failures into strength into pullbacks, right, and pullbacks back up, right, to retest the high. It's the exact same pattern I've been preaching here, right, the entire video tonight. So spike in channel patterns, again, are notorious for deep pullbacks. There's that spike in channel. Deep pullback, right, back up we go from there. That's the overall plan. The hard part now is this resistance trend line, right? Because that's really our Achilles heel. When it comes to that resistance trend line coming down overhead, there really are two ways to trade it. One, you've got to get away from it so you're not buying into resistance. But that's going to be a little bit difficult because if we get away from it, the market's going to be moving lower. So it's always a bit difficult to get that trade to work. The easier way to do it is to get above it and use it as support, right? That's going to be the easiest way to get long on this euro. I've got this rising support trend line. This is the same support trend line we talked about in last night's newsletter, right? That is the same support trend line from last night's newsletter. Almost like a channel here right now in all reality. Right, I want to buy that low. I want to buy, right, going back up to retest the high. I still have that reversal line. The problem, though, is if we get a collapse down to that reversal line, this will be a bear market at that point. Momentum will be a little bit too strong at that point, I think, if we pull all the way back to the reversal line. So really what I want to do is I want to get this somewhere in and around this area right here, right? Get through that trend line. I've got a little tiny range up here. Little tiny range up there, right? No big deal there. Anytime we see a spike into a range, what do we look for? You know this by now, right? One try, two try, failure back up. So same basic principle we talked about on a lot of other markets tonight. We have a bull bias. We have a trading range. I'm looking for that second try failure. But again, because of that trend line, I'd like to get us above that trend line, right? So one try, two try. I mean, wouldn't that be great if we could get that resistance trend line along with that support trend line, along with the two try, one try, two try failure? I mean, wouldn't that just be all sunshine, butterflies, and rainbows? Hopefully we get that great opportunity right tomorrow morning. And then again, don't forget, as we go higher here, if it continues to jump higher, get that moving average up, two-legged pullback, right, and off we go up to that big measured move target waiting overhead. So again, it's the breakout pullback, right, on strength. It's the two-try failure below that low. You know, other than that, what else is possible? A reversal, right? We've had a lot of real bullishness on this euro. You know, again, we get some big news coming out tomorrow, so who knows, right? Maybe we get this market collapsing here tomorrow. What it look like? Yeah, I think it's going to come off this trend line probably. Right, that trend line will probably be strength, pullback, strength, you know, something like that. Find that new channel, and then this whole area now, that whole area right there now becomes your spot sell. Right, we're selling back down. Okay, don't worry about this reversal line at 16,700. If this thing turns bearish, strength, pullback, strength, it won't matter. It won't matter. So ignore that reverse line. Don't worry about that. When the market's bearish, it doesn't worry about that. Find resistance. And again, we're looking to sell up around the high, right, of that channel. There's a big potential target to the downside if those bears, right, can take control back to that big round number around 16,000 tomorrow morning. So again, two try, one try, two try, back up again. Right, really just trying to get above that trend line, even if it does go lower above that trend line. Look to use that trend line along with that failure pattern, right, to go back up to retest the high, or it's a strength through the high for the breakout pullback at the moving average above, right, or it's a strength pullback, strength reversal. That way we get all the angles covered here tomorrow. Don't forget, we are expecting increased volatility next couple days here as we wrap up, right, what has been a fantastic month of August. Keep your eyes out for those news reports tomorrow morning. And don't forget, my job here at School of Trade is to help ordinary people transform into extraordinary traders. I have a beginner, intermediate, and advanced classroom sessions that teach an incredibly easy trading strategy. If you want to learn more, grab our free trial on the homepage here at School of Trade. As part of our free trial, I'll teach you more about the strategy. I'll send you some invites. Come out and test drive our trade room, right, as a guest. And don't forget, if you have any questions, you can always call, right, drop me a live support, right, or if you're here in Los Angeles, stop by anytime, right, and come see us right here in LA. As always, my name is Joseph. Thank you so much for being here this afternoon. I know you guys probably have some beach somewhere you'd rather be hanging out on right now as the month of August comes to a close, but I appreciate you being here with me. Thank you so much for your valuable time. Keep in touch. Grab that free trading course. It's linked up in the description of the video, and I will see you guys tomorrow morning, 8 o'clock Eastern Time in the trade room. If not, same time, same place tomorrow night on our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.